expectations are, 0.1% quarter-on-quarter growth. But this is still dismal in the greater scheme of things, isn't it?
Thanks for having me on, Eleni. Absolutely. It's really a tale of two halves, I think. The good news is that for a second consecutive quarter, UK GDP expanded. Now, let me take you back 2-3 months ago. Expectations were for a protracted recession. The survey data was talking up the risks of a long 1 to 2 year recession. The Bank of England was expecting a long recession. We were expecting a recession as well. But against all odds, the UK economy has defied expectations. We've managed to just about eke out 2 consecutive quarters of growth. But as you say, we're not out of the woods yet. We are seeing tightening in monetary policy work its way through the economy, industrial action dragging on the UK economy. And we saw that just a little bit in the March GDP numbers. So yes, Q1, 0.1% Q-on-Q growth, but March GDP falling by 30 basis points, 0.3% month on month. And that, I think, is just a reflection of the state of the UK economy.
Yeah, and it's a cost of living crisis, right, which inflation is just chipping it away at people's ability to be able to spend. 12 consecutive interest rate hikes. And we know that the MPC is sort of divided in those that think that there should be a pause to try and give consumers some relief, and others that think this should continue. Where do you stand? What do you think the right thing to do here is?
Well, certainly the MPC is divided, as you say. But look, the MPC has opened the door for another hike. We came into 2023 saying that landing zone for the bank rate for the Bank of England is somewhere between 425 and 475. That's where we think they'll end up landing. And we've hit 450 yesterday with a quarter-point hike from the Bank of England. We think there's one more left in the tank. So we think we see terminal rate at 475. That is our base case expectation. We're expecting to see the labor market continue to outperform expectations and inflation stay a little bit stickier. Bear in mind, UK inflation is still at 10%, a little bit above 10%. We have one of the most elevated inflation prints across the G7.
What is the prognosis in terms of, how quickly these interest rate hikes are going to put a dent in inflation, keeping in mind all the other externalities, all the other pressures that we're seeing coming through in the global market, which is obviously feeding through into the inflationary scenario?
Well, the famous line is that monetary policy works with a lag of 18 to 24 months. There's good reason to think that maybe that may be slightly on the optimistic side, but we are seeing some of that feed through into the economy. If you look at the March GDP numbers, if we go right back to that, consumer-facing services down 0.8% on the month. So we are seeing some of the effect of that tightening in monetary policy work its way slowly but surely. But the peak effect won't really come or won't really hit us until the middle of next year, and maybe even slightly later than that, just given the lags in monetary policy transmission.
Yeah, really hard to predict, right? You're either too proactive or reactive on monetary policy. Hopefully it'll all work out. Good to see you, Sanjay Raja. Great to have you on the show.